Rui, would you mind introducing yourself and telling us a bit about your role?
Yeah, my name is Rui Domingues and I am the Director of Finance and Operations for CFG. I lead the finance, the technology, the HR facilities and governance teams at the charity. And that sounds like there's quite a big team. There are 6 of us in the team, 2 in finance, 1 leading the technology, 1 leading the HR and another person across the facilities and governance side of things. So quite a small team, but covering quite a wide spectrum of stuff.
Tell me about the past year for CFG, a brief history.
I joined CFG last July, in July 2020, so I've been with the charity for a year now. And as you can imagine, I joined at that time, right in the middle of the peak part of the pandemic and how it's affecting charities and lots of other organisations as well. That period was a very strange period for everybody. But if you look at the 3 stages of a business recovery, there's a response phase, there's a recovery phase and a renewal phase. And that responding phase, that crisis management, was dominant for last year for us as a charity, for the sector, for the economy and for the world. And so that was where we were last year. We were in that respond phase. We still managed to do some of the operational things that we'd planned to do during the year. So we restructured some of the teams within CFG. That was planned before the pandemic hit, and we were able to implement that in 2020-21. But probably the key thing was that response phase, as well as those operational bits, the response phase for us. And for us, managing that crisis was really about, we had a 40% drop in our income or thereabouts. A lot of our delivery was via face-to-face conferences and training events, and we just couldn't do those anymore. The facilities weren't open, we couldn't hold the events, and we had to change completely over the year. But we did see a significant drop in our impact. And so we were in that responding to the crisis phase at that point. And I want to say a really big thank you to our members, because people have still signed up onto some of these online courses. People have kept up their membership with us over the year. And so just want to really say a really big thank you to our members for continuing to support us and seeing the value that we bring to you as members and to the sector more widely as well. That's really helped us enormously over the last year. For us as a team, it has been crisis management, both around the facilities with our office, the technology side of things, around the HR and the staffing side of things, and particularly around finances. So we've been very much in responding crisis management mode for the last year.
And how did your team respond to the crisis?
Yeah, well, there were a couple of things that we did during the year. I think, firstly, just looking at purely practically on the technology side of things, we had a closed office. We had to move to completely remote working for the whole staff team. And we've been desk-based with desktop computers. And so we had to move very rapidly to laptops and Office 365. So that partnership with our support company as well, KCS, who provide us with that support for our technology side of things, was crucial during that period, where we were able to move from desk-based to that more mobile way of working, with people working at home in kitchen tables and bedrooms, as most people were doing last year. So that's one of the things we did. One of the things we did very quickly in 2020. But the other thing that we did during the year was we changed, from a financial point of view, we changed how we did our reporting. You would have thought that actually you'd beef up the depth of your management accounting, but actually we took a decision to go back to more basic reporting and monitoring during the year. And what we did was we went to a very cash-based model for the year. Where were our inflows coming in that would sustain us for that year, and where were our major outflows? Major outflow for us is our salary side of things. So we knew with certainty when that was happening, and so we had to plan our cash inflows and try and make sure that that was coming in to make sure that our everything was balanced for the year. We still have made a deficit in the year, but it was much lower than we'd originally projected earlier in 2020. So we changed our monitoring. That was well supported by our board and our finance committee. They wanted to see more targeted reporting. But also during the year, what we've been able to do is make use of a couple of things that the government put in place as well. We've been using the coronavirus job retention scheme. I'm really proud of the fact that we've been able to use that support that central government has given to mean that we've not had to make anybody redundant from the CFG staff team over the last year. The other thing we've done is we've applied for the coronavirus business interruption loan scheme as well, to give us that buffer for our cash as we're looking to move beyond that response phase into the next phases of that business recovery cycle.
What does that next phase look like?
Yeah, well, I think going back to that model of those 3 stages of respond, recover, and renew, I think we've got through that crisis response phase now. We are in the sort of the recovery phase and slightly into that renew phase as well. So in terms of recovery, we are planning to reopen our office at some point in 2021. We're not entirely sure when that will happen because we're still waiting to hear when the government restrictions will change around coming into the office space as well. But also during that recovery phase, what we're looking to do is support our membership as well. So we've got a couple of programs that could help some of our smaller members. We were able to secure some grant funding from Garfield Western last year to help some of our smaller charities with their membership fees. And also we've been able to secure some cheaper or places on one of our flagship courses, our Inspiring Financial Leadership course as well. So in terms of our finances, we've been able to juggle that with some of the pressures that we have to still enable those to happen. So those are part of some of the recovery phase work that we're doing this year. And also when we look at some of the renewal phase work, we're obviously looking at some of the technology around hybrid events. Our members really value some of that face-to-face interaction that our historic events have had. And we'd love to be able to bring those back. We're not sure when that will happen, but we do need to test some of those hybrid events. So that blend of face-to-face and online attendees will be crucial for us to test and might give us an ability to support more charities around the country to come to our events if we have some of these online events. If we look at some of the teams more specifically, if we look around finance over the next year, where with a loan in place, we've not had a loan before as a charity, we'll have to do more regular reporting and more regular monitoring to make sure that we're servicing that loan and able to service that loan going forward. When we look at the technology side of what we do as a team, we have to be more agile in some of the innovative work we're looking to do around our core system, our SAP B1 system. We're also looking to close down our servers in our office and go online and become Cyber Essentials compliant by the end of the financial year too. On the HR side of things, because we're all working in this different way, because we're all learning to work in this blended way, we need to refresh our values and see how that filters through into some of our processes as a HR team. So that's a key piece of work we're going to be doing this year as well, is looking at our values, seeing how that feeds through into our behaviours and our personal development plans for the future as well. And on the facility side, I think I've already mentioned, we'll be looking to reopen our office at some point in 2021 as well. So those are some of the operational tactical things, but also just having that oversight that we're moving into these recovery and renewal phases where we'll be looking to embed our new ways of working from the sort of crisis management that we had before.
On the whole, how would you sum up 2020, 2021?
Yeah, I think there are probably 3 things that I'd probably sort of sum things up. It was tough financially. You know, don't make no bones about that we cannot underestimate just how tough last year. To lose that amount of income overnight was tough for the organisation. But that is what our reserves are there for. They're to help us weather some of those storms, and we've had to dip into those with our deficits this year. And we're not out of the woods yet. You know, the pivot to our new model is not quite there. So this is still a tough financial environment. And, you know, I've said it before that actually I'm just blown away by the way that our members have renewed with us this year, that new members have come on board and have just seen the benefit that CFG provides for them personally. And as I say, for the sector more widely too. I think summing it up as well, rapid change. I think we've had to work in such different ways over the last year. And with that has come some pain with that change as well. But that rapid change might be a good thing for us to learn for the future, that we can change rapidly when we look to do things in a different way in the future. But finally, I think I'll go back to that 3-phase model as well, that I really do feel that last year was a year of trying to recover, was trying to cope with unprecedented, which is such an overused word, but such an unprecedented year. We feel that phase, we have come out of that now, but those recovery and renewal phases are still very much in their early stages and could easily be wobbled back into a different place. But that would probably be the way that I would sum up last year, that we recovered, but not out of the woods yet.
What have you learned in this time?
Well, I think that personal and professional thing, probably that they come together probably over the last year, and they've probably come together more strongly for me than they ever have done. We've been working in our homes. We've been trying to blend the homeschooling and the distractions that happen at home with trying to maintain the services that we provide as a team to the rest of CFG, but also that CFG provides to the rest of the sector and to our members. So I think that's probably been the biggest thing, is learning how to juggle those different things, the flexibility that we now have in what we do. And I think that's helped me see that actually we are very holistic individuals. It's very easy over the past way that we've done things to compartmentalize our personal and our professional lives. But actually they've become so blended over the last year. And it's, I think, been a bit more helpful to see individuals in that more holistic sense, rather than as perhaps just a worker, and not focusing on some of the challenges and some of the struggles they have at home as well. So I think that's probably been the biggest thing, learning how to support the team who've had their own challenges over the last year as well, with their way of trying to blend all of that together. Learning how to support them and get to know them probably better than I would have done if we'd been in an office environment, I think has been quite useful. But the biggest lesson for me has been to look at the individual holistically and see where they might need support that we might not traditionally have looked to support people with.
And what were the positive outcomes from your point of view?
Yeah, I think for me personally, I've been a member of CFG for about 20 odd years since I came into the sector, and I've always found the staff team to be really approachable, really supportive. But actually being on the inside now, I can actually see that the staff team is way beyond what I ever knew as well. So, I've been completely blown away by that too. To have the commitment that people have had to maintain services whilst working on part-time hours to take advantage of the furlough system. Yeah, that's been actually quite eye-opening to see the amount of work that people have put in over the last year, and the commitment that people have to supporting members and the sector. We do need to be careful. I think that's the positive aspect, but we do need to be careful because I think a lot of people now are feeling very stretched and overstretched, and we just need to be taking care of people as well at this point too. I think the biggest thing as well to come out of last year is that it's probably accelerated some of the plans that we had to move to a more digital focus in our delivery too. So we would have loved to move to that sort of hybrid event of face-to-face and online to try and reach out to charities that wouldn't traditionally come to some of those events. And COVID has probably meant that we've accelerated some of that development. Our model is having to change because of the virus. And that's not a bad thing to come out of the last year. There have been so many bad things that have come out last year, but in terms of looking at the positives, those would probably be the two key ones: the staff team and the acceleration of some of the plans that we already had in place.
Thanks for your time, Rui.